Good morning, ladies and gentlemen. What's going on, guys? Welcome back to another pre-market watch list here today. Thank you guys again for tuning in, as always. So sorry I haven't been on the past couple days. Again, I've been super busy moving into my new place, back and forth moving things along with trading and working. So it's been a pretty hectic past week or so. So haven't been on as much, haven't been on to YouTube as much, so I do apologize. But good morning, Yuri. Flying Tortoise, good morning. Good morning, Shazi. Good morning, good morning, good morning. All right, guys, yeah, so good morning. Get that out of the way. So as many of you guys know, the market's taking a pretty big beating. They've been down quite a bit. I've been short the market for quite some time. Yep, I'm still in Michigan here. I'm not sick. I might sound sick, but I'm not sick. I don't know. But anyways, guys, right? So we know the markets are going down. They've been pretty volatile. So what does that mean for you guys? A lot of you guys should make sure you're paying attention to things like TVIX, which we've been mentioning for the past basically week, maybe week and a half, to make sure you're paying attention to your volatility ETFs. So yeah, even if I don't get onto YouTube some mornings, that doesn't mean I'm not trading. I'm probably still working. I just didn't get onto YouTube. And another thing is I forgot my camera yesterday. So a lot of things have been all out of place. So going forward, the market it's very bearish. Chances are we're going lower. There really isn't anything in sight for a bounce. I don't see any bounces really coming in. When I say bounces, I mean like a legit bounce, not like a 2 or 3 day or 4 day, uptick in the market. I mean a legitimate bounce. There's no structured support anywhere close. We've broken the 252, 253 lows from the back beginning in February or January, beginning of 2018. So nothing really looks good. The Fed report, the report that came out on Wednesday wasn't good. There's really nothing good to say about the market. And this is, guys, I mean, this is what we've been saying for quite some time now, okay? So your volatility ETFs are going to be good. At this point, which we've been saying for quite a while too, is watch your large cap stocks, because your large cap stocks are normally going to be usually the stocks that are most affected by the overall markets, right? They usually have the biggest effect, right? So if the market's volatile, we see a lot of movement up or down in the market, chances are you'll see a lot of up or down movement in some of your bigger, more large cap stocks. So the large caps are seeing increased volatility than what they would usually see. So there's more opportunity and bigger range for profit these types of days when we're having such big wild swings in the market, okay? What I will touch on before we start looking at any stocks, I know you guys probably don't want to look at my beautiful face too much longer, but bear with me, no pun intended. So with the Fed report that came out on Wednesday, now I still have to look into it more and do some more research on it. I've only really taken a quick glance at it. So to tell you that everything I'm going to tell you is 100% perfect would be basically a lie in a sense. I don't know for sure that everything is entirely as accurate as I'm going to make it sound. So I'm going to do some more research on it. But from what I've gathered so far is we do plan on doing more interest hikes throughout 2019, which won't be good for the market. It looked like inflation was expected to increase by 1% from 1.9 to 2%, which when you think about it, 1% isn't really big, but in terms of inflation, 1% is kind of big, but nothing to really worry about. But they didn't expect that inflation was going to increase greater than 2% from like 2019 to 2021. But again, that's only estimates based on the type of data that they're receiving right now in current economic data and conditions. So inflation could get above 2% or raise more than 1% as expected. GDP growth is expected to decrease based on their data that they've received. I think GDP sits at about 3% right now. They have expectations and estimates that from 2019 Currently 2018 to 2021. We could see a decrease in GDP from 3% all the way down to, I think it was 1.8% on the wide end of the spectrum. So global growth is slowing. I think they even said unemployment was supposed to increase. So when you think about those numbers, unemployment's supposed to increase, inflation's supposed to increase. And by the way, the reason they raise rates, interest rates, is to help keep inflation down. And even though they're raising interest rates, we're still going to be getting a 1% increase in inflation. So again, none of the data and the info that we're getting from this Fed meeting really sounded good. And then you get these other guys coming out saying that the markets overreacted to the Fed meeting, when in reality, no, we didn't. There is zero overreaction to the Fed meeting. Everything the Fed basically told us is that the economy is slowing. So how is that an overreaction to sell off some of the assets? It doesn't make sense. So just know that I will do some more research on that info or that data and see if I come up with anything different. But basically everything that I've told you is, for the most part, I think pretty darn accurate. So with no further ado, let's get into sharing the screen. So screen share, here we go. The camera is not there. That's all good. Okay. Let's pop this onto just one screen here. Okay, we'll go full screen with this guy. All right, so really, I'm keeping today pretty simple. So far, if things pick up and go crazy, then cool. But for right now, the main stock I have on watch is Nike. So Nike had, I think they actually had a pretty good earnings report. They did get like a few price target raises to like 80 and 78. So, you know, it looks bullish right now. So what we're basically watching for is to see if Nike rejects $74. 74 is kind of this resistance level I have mapped off. So if Nike can get over 74, I think it could have a nice pop for a long. But I also fear that Nike's downtrending, the market's downtrending, and that we're actually just going to see sellers come in and pile in on this Nike's earnings push up and just start selling into this move. So I'm not even sold on this whole earnings report as it being bullish. I kind of think we're going to see Nike continue into the downward trending motion, and this earnings breakup to the upside is really just going to get sold into. So we're going to be watching Nike around the 74 price. If it holds below 74, we start seeing selling pressure. We're getting sell signals. Sell signals can come in the form of candlesticks. They can come in the form of a stock chart pattern. They can come in the form of moving average rejections. They can come in the form of data coming through level 2. It can come in the form of reading your time and sales window. Okay, so there's a lot of things that can give you a sell signal. So that doesn't mean when it gets to 74, just open up a short. I didn't say that. Right? I'm saying watch it at 74. If you're getting signs of rejection, if it looks like it's turning into a short play, take a short if it's not breaking 74. If it's showing strength and it's at 74 and it's struggling, but it's really not giving you a sell signal, then you shouldn't be shorting at 74. Wait for it to break over 74. Can it hold 74? Okay, so 74 is pretty key. We could see it push up, get over, and then go on a nice run. If it doesn't, we could see it sell off. But as of right now, everything on Nike's chart is in fact pointing bullish. We have an uptrend. We are uptrending. We had a flat top. We just broke the flat top. We're increasing towards 74. All right, you get the point. So over 74, we're going to watch Nike long if it can hold. If it can't break 74 and it struggles, we'll watch it short. All right. And then also just keep an eye on the market in the back turn. Okay. Next, I think I might have went over that with you the other day, but I want to. Nah, I think I did go over that the other day. We won't touch on that. Never mind. Okay, so then we're going to look at the market here. So the market's going through a spike here. This is honestly, I mean, this is well anticipated. When you look at the market, it's been going down for quite some time. So to see a green day in here doesn't really surprise me. But something that's very likely that we're going to even see here is it's very possible that we can see the market have a pullback. And also note, guy, that pullbacks don't just mean stocks coming down and then going up. They can actually mean stocks going up then coming down. A pullback is just a pullback in prices from its current move. So if a price is going up and then it starts coming down, that means it's pulling back. If a stock is going down and then it starts to go up, that means it's pulling back. Vice versa. It's the same thing. So we might see the stock market pull back up to this 252 price, which was kind of that previous 52-week low. So it's very possible we see it come up to 252 to retest that 52-week low resistance, gets to there, bunch of people add in short again, and then I think we'll see the market come right back down. So all in all, for me, short bias on the market. I'm currently short the market still. I've been short the market. I closed out a big short position yesterday for about a roughly $22,000 or $23,000 gain, still holding some. So I'm going to be waiting for some of this immediate kind of panic selling to settle just a little bit, see if we get a pullback, and then I'll probably be re-entering the market short again. So all in all, I mean, I'll be watching all large cap stocks today, Netflix, TVIX, but the main one I'm watching is really just, really just Nike. That's really just it. But I'm gonna be paying attention to a lot of the large cap stocks today. And that's really all. I don't really have some crazy watches for you guys today. I didn't whip up anything special, okay? This isn't grandma's cooking this morning. It's just a simple earnings play, Nike, and a simple run through that you guys need to be very patient with the market. Make sure you're watching the market, and that is the Dow Jones, the NASDAQ, the Russell 2000, the SPY. It's not just the SPY. It's pretty much everything. Actually, I'm going to pop back to the screen. That's another thing, guys, is don't just make sure you're watching. I always refer to the SPY. Don't get me wrong. I could give up maybe some misrepresentation here a little bit because I always refer to the SPY as the market. So some of you guys might only think to look at the SPY, but it's good to watch things like the NASDAQ, the Dow Jones, and also the small cap index Russell 2000 along with the SPY. There's multiple indexes. You can watch the financial index. You can watch, I mean, there's a lot out there to pay attention to, okay? Andrew left, killed Twitter. I remember some people saying some things about Twitter yesterday in our chat room. I know it had a bad day. I didn't read anything about Citron, but the funny thing, here's another funny thing is realistically, Twitter has been going down. Twitter's already been going down. Like Twitter has been going down for a while. Twitter was meant to do this. And I didn't short it, but we had mentioned to our members in the premium service to start watching Twitter short because its 3-year chart is a perfect head and shoulders pattern. So whether or not Andrew Left came out with anything, Twitter was most likely going down, but NASDAQ SE, regardless, you're right. I mean, if Citron Research gets in on a stock, they're going to hammer it down all the time. But what you see here on Twitter is a perfect 3-year head and shoulders pattern. So we're most likely going to be seeing Twitter here within the coming weeks to months, breaking down prices of 26, 25, heading lower into 20s to low teens. That's most likely the move that will be coming for Twitter in the near months. You'll be seeing it low 20s to mid teens. Twitter is most likely, like I said, Twitter is most likely going to be continuing down to to mid-teens would be a big move. That would take some time, but without a doubt, I think we'll see Twitter down into 20s, mid-20s to low 20s. Okay. Am I forgetting something? Feel like I'm forgetting something. Whatever. HII, Huntington Ingalls. Huntington Ingalls, I don't know how you pronounce it, but they're extremely bearish. You should be short bias on that stock. Does that mean you should short it today? Nope. That means you're probably going to have to wait for the right entry to join in on the trend, but right now the stock is trending down very clearly. It is extended from its trend line. I would wait for it to pull back, and then I'd probably enter short and just ride that wave down. Oh, let's see. BILI connected. I seen BILI on my scanner this morning. I wouldn't mess with it. I mean, again, look at BILI. The range is extremely small, hardly ever moves. I wouldn't mess with it. Again, guys, there's better plays out here than this today. And that's another thing, guys, is, you know, like in this market, you don't need to be searching around like thinking of these crazy theories and the next big idea. You don't need the next big idea. The next big idea is already here. The stock market's bearish. Just start shorting stocks. Okay, play your volatility. When I say this in a way that I don't want to come off mad, but it is no, that would be false. I was gonna say it's never been easier to make money than now in the market, but that's a lie because some people don't know how to short. So then that would be false. I can't really say that, but I would say it's still pretty easy in this market in terms of opportunity. I mean, like if you're a long bias trader, right? All you pretty much have to do at this point is just ride TVIX and you'll make money. And what I mean is you don't have to search around for crazy ideas, is the fact that the only thing you really need to do in this market is watch the stock market. Like when the stock market's going up and it's steady, you don't really need to watch it. Whatever it does, it does. But when it's going down, you just watch that and just tie that market directly into any stock that is performing similar to the market or is performing opposite of the market, okay? And you'll find it. I mean, like look at, like, for example, let's share the screen here, okay? Ready this? Because of the market, this is what can happen intraday. Boom. Look at this. Netflix. Look at this downward move on Netflix. That dropped from high of day at 269 down to a low of 259. Almost $19 per share in one day because of the stock market. That's what happened. So I don't need to go and search for a new idea. The ideas are right in front of me, and I just got to sit back, be patient, and follow it. And it will show its face. A $16, $15 short play on Netflix yesterday, all because of the market. That is just, I mean, that's incredible. I didn't play it. I told my dad to short Netflix yesterday. He didn't listen. Now he's like, I should have done it. And that's okay. Hindsight 2020. I was short the stock market all day, so I wasn't shorting Netflix. But that's what I mean, right? Like, that's it. Like, that's a massive move, a 20-point move. That's the type of volatility and movement we're seeing because of where the stock market's at. Let me go back into here. So, yeah, so again, guys, like everyone always asks, what do you look for us? You know, like people always like, well, what do you look for? You know, this is just a major question. What do you look for when buying into a stock? You know, what signals are you looking for? What are you seeing? Why are you buying the stock? And the thing is, you can't really, there is no answer. You know, like, and that's why it's kind of like a catch-22 because, you know, like whether you want to refer, you know, our Boiler Room trading course, or you want to, you know, talk about the Learn Plan Profit course that Ricky Gutierrez provides, or whether you're referring to, you know, Ross Cameron's Warrior Day Trading, like premium, like inner circle, like I don't even, whatever it is, you know, Iconic or Investors Underground, or, you know, the Profit Room, any one of the trading education course in chat rooms. You know, when you ask any of those mentors or as traders that do this all the time, you know, the main question was well, what are you looking for to get in, or how did you know to get in? Like, what are you looking for? And what those people are asking us is they're looking for a quick 1 to 2 answers for their question that says, oh, we seen this resistance point, so we shorted, or we seen the support level, so we bought. So then when they go and they try to implement that into their trading, they try it, it doesn't work, and then they go, I don't understand it. You know, I thought I was supposed to buy at support and it would bounce, right? But that's the problem. Support is only one thing you need to know, right? Like I said, when it comes to me taking a trade, all the things that go through my head, support, resistance, moving averages, time and sales, level 2, news, stock market conditions, economic, like all those things are going through my head at some point when I'm in a trade or taking a trade. I'm thinking about, is the setup short bias, right? Was the stock looking like a short setup? And if so, now I know that shorters are shorting it, and that leads towards potential for a short squeeze, right? When people ask me, Connor, how'd you catch that big move on the penny stock? How'd you know it was going to move that much? I didn't know it was going to move that much. All I know is that this penny stock, that it was trading on whatever day, I knew people were shorting it. So I knew that if that short failed and it didn't go lower, that it would end up squeezing higher. And I know that short squeezes are extremely powerful and they usually result in a big move. So I didn't know that it was going to move that big. I just had an understanding that it could move that big based off of what I know as an experienced trader. It's not just, oh, bullish pennant. No. It's not just, oh, bull flag. No. It's everything that you've learned combined into one. And you use that to generate and create plans of attack during your trading career. Okay? And so it's not based off of one thing. It's based off of accumulating a massive amount of knowledge, and that's how trading works. So that's why a lot of new traders will find it difficult to trade, because they think it's all about, you know, going off of support, or they think about, if I'm going to get long, it's all about a bull flag, or it's all about a bullish pennant, or it's all about just finding good news. And then here's the other thing, right? You know, that I get people go, well, how did you know people were shorting the stock? I didn't know people were like, well, I did, but they go, how did you know people were shorting the stock? Like, if I wanted to know how people were shorting it, how would I find out? Because then they go, well, do you see that people are shorting it on the level 2? Do you see that people are shorting it on time and sales? No, you don't. Because the system does not deliberately come out and tell you, hey, person A, B, and C are short selling the market versus people D, E, F, and Z, and whatever ones are just selling, right? It doesn't tell you, and they don't raise your hand and go, hey, I'm shorting. No, it just shows up as selling pressure. But as you trade long enough, you'll start to understand when people are probably shorting based on the chart, where the stock price is at, the setup that's occurring, maybe the news that's on the stock that day. You'll start to be able to generate and know where short sellers are at, what they're trying to do. And if you know that what they're trying to do is not going to work and it's going to fail, then you know it will result in a short squeeze and you can take advantage of it. And so it's going to take you a long time to build that knowledge base to the point where, you know, you're on point. But just know that it's not just one thing when I'm taking a trade. It's not a time and it's just a ton of knowledge just bunched into one. Okay. I'll run through maybe just a few of these quick questions that I got to head back to the premium trading group here soon. Jaywan, in the course we have already in our premium day trading course and chat room, we go over market condition, we go over TVIX, we go over volatility index, we talk about how they directly tie into stocks. So we do go over that currently. You can short on Webull, and yes, you need a margin account. You need a margin account to short on any broker. How long have I been trading? About 5 years. Actually, basically 5 years. Took me like 2 years, but 2 years of just like hustling at this. And then again, guys, I knew about like investing way before I even knew about trading. So like I already kind of had a background in investing before I started trading. Lines on the chart are not the average true range. Lines on the chart are the volume weighted average price. Mr. Pana? Nope. See, I'll show you. Oh, I can't. I don't have my drawing tools. I'll use one. I'll share the screen to you. See, watch this. I'll make it. I'll draw something on the screen, and I don't have my other tools up right now, so just bear with me. But this is basically what it looks like, right? Let's say a stock goes up 1,000%, something crazy, and then it starts to drop. Everybody's gonna go, holy cow, that stock's up 1,000%. It's gonna crash. I'm gonna short it. So they all start shorting it, right? And then it goes down, and then it might bounce up again, and then it starts going back down, and then they all pile in short again. And then once this thing, right, once it bounces back up and breaks a trend like this, all those shorts get squeezed out and it keeps going. Actually, you know what's a perfect example? Want me to show you? Here is one. I'll do this real fast. MRIN. You know what's funny is everybody is probably thinking, wow, MRIN had such a really good day the other day. You guys want to know what happened? The thing short squeezed all day long. Ready? This right here, I'm going to... how would I do this? Here, I'll use this square box, right? Ready? That right there, short squeeze. This right there, short squeeze. This right there, short squeeze. All three of those moves that went up on the day, short squeeze. This right there, partially a short squeeze. All of those were short squeezes all day long on MRIN. That is exactly why that stock went up so high in the day. See, what was happening is this is what those shorts were trying to get. They were trying to get this move that I just highlighted. They wanted that big downward move, and they thought it was going to come, for one, earlier in the day, here or here or here or here, but eventually it was there. So the whole day, all the shorts are trying to catch this big drop, but in fact, they kept getting squeezed up and driving that price up all day long. Okay, same thing over here. Okay, watch what happened. A bunch of people entered short on the stock market. It didn't drop. They got short squeezed. Okay, and then look at, they all shorted again right here because of the double top. It came down, it curled, failed again, short squeeze, and then it turned into a bullish run. Okay. Anyways. That's enough I got for you guys today. Anyways, we're going to end it there. Everybody have a good day. I'm going to get back to our private trading group. If you guys do want to enter into that private trading group, it's the first link in the description. Feel free to join us. It's only $30 a month. You'll learn something that you can use for the rest of your life. So even if you don't make money tomorrow, if you don't make money next week, the stuff that you'll learn will last you a lifetime, which will probably end up making you money at some point in your life. So stay tuned, and I'll see you guys in the next video. Take care.